Every gambler knows that the secret to surviving is knowing what to throw away, knowing what to keep. 'Cause every hand's a winner and every hand's a loser, and the best that you can hope for is to die in your sleep.
In this chapter we are briefly going to discuss about market making and market manipulation. So let's get started. A market maker or liquidity provider is a company or an individual that quotes both a buy and a sell price in a financial instrument or commodity. Market maker hope to make a profit on spread between the bid and ask. That is the definition, but market making is much more than that. It is like a wholesaler-retailer concept. Now let us see how it works. Let us take an example of wheat. So a retailer comes to the wholesaler and asks what is the commodity that is in demand now. And the wholesaler tells him it is wheat. Nobody sells wheat and it is in demand now. It is only $10 per bag. And the retailer buys 100 bags of wheat and he sells it in retail for $15 per bag and making a profit of $5 on a bag. And you have to remember one thing. No other retailer sells wheat. And another retailer next to the first one takes a notice. He notices that the first retailer makes a lot of profit selling wheat. So the second retailer thinks that he should also sell wheat and goes to the wholesaler. He too buys 100 bags for $10 each. And sells it at $14 per bag in order to compete with the first retailer who is selling it for $15. And soon other retailer also join the party and further increasing the competition and thus reducing the price of the wheat to $11. By the time most of the market is flooded with wheat and the customers who buy wheat has reduced drastically. So most of the retailers have sold half of the stock for profit and is sitting with other half not being able to sell due to lack of demand and profit. Now the first retailer again heads to the wholesaler and asks that what is the commodity now in demand. And the wholesaler tells that it is rice and nobody has rice and the retailer buys rice for $20 per bag and start to make profit. Meantime the first retailer asks the wholesaler, I have few bags of wheat left with me which I am not able to sell due to lack of demand. Can you please take it back? And the wholesaler tells yes. And the retailer asks how much can I get for a bag? And the wholesaler tells $5 per bag. And now the retailer complains that I bought it for $10 and now you are buying it back only for $5. And the wholesaler tells that at that time wheat was in demand, but now it doesn't have demand and can only pay $5. As the retailer has made enough money selling most of the bag for profit, now he wants to get rid of the old stock and sells it back to the wholesaler for $5. So the wholesaler gradually collects all the unsold wheat from all retailers in a lower price than he sold till there is no more wheat in the market. And time passes by and the same scenario happens with rice. First retailer makes a good profit with rice and so all other retailers follow, thereby dragging the price down and finally reducing the demand for rice. And the retailer again comes to the wholesaler and asks, now that the demand for rice has come down, tell me what is the commodity that is in demand now? And the wholesaler tells that it is wheat, because there is no wheat available in the market. And he again sells it for $10 per pack. This story explains how a wholesaler-retailer works. The wholesaler selling to retailer is called distribution. The process of buying back the unsold wheat and making sure there is no more wheat in the market is called accumulation. Market maker always accumulates in falling markets and distributes only in rising markets. That is what is called accumulation and distribution in trading. Here the wholesaler are banks, retailer shops are brokers, and the customers who buy wheat are normal traders who buy and sell commodities, currencies as stocks. Hope this explains the whole picture. Now let us talk about market manipulation. This topic is worth explaining for at least 10 hours. But let us keep it short. There can be many kinds of manipulation from central banks to market makers to brokers. One scenario in which central banks manipulate markets by news release, interest rates and other fundamentals. Your market maker may also manipulate markets in more than one way. Let us say, for example, a big client in United States wants to convert $1 billion to euros. Naturally, he has to sell dollars and buy euros. So he comes to the bank and delegates the bank to sell dollars and buy euro at best price. And the bank now has $1 billion to sell. Like explained previously in the wholesaler-retailer story, the market makers always sells in rising markets. So the bank may create a temporary demand or a pump and dump for dollar. They may keep fake buying in dollars to move the market upwards. And the bank does this till everyone thinks that there is a demand for dollar. And by seeing the dollar going up, normal traders enter the bandwagon thinking that it may be a trend. And no sooner than later the bank dumps all the dollars he has at a higher price. And from now on market is left with no demand for dollars. And naturally comes down, eating away from the accounts of normal traders. This is one way. Another way is front running. Suppose a trader buy euro-dollar for 1.2200 at market price. And this order goes to your broker. And the broker passes it on to the bank. And by seeing that it is a market order, the bank temporarily moves the market 2 pips up to 1.2202 and sells to the customer for 2 points profit. This is called front running, and moving the market knowing the order flow. And your broker may also manipulate you with wider spreads, or execution delays, or requotes, or false price. The broker may also sell your order information to market maker so that the market maker can front run from your orders or run stop losses. And the list goes on and on. No need to worry. If you know the rules of the game, there are ways to manipulate the brokers and market makers and profit from them. In this modern day of market manipulation and high-frequency trading, it is very difficult to make money doing old-school trading. That is why we, at AutomatedWealthManagementTool.com, have created a state-of-the-art trading tool for all your money management needs, and a mentoring program using unique strategies that work in modern-day trading. Contact us at support@AutomatedWealthManagementTool.com.